CPI rebasing might reveal. Let's talk to Mr. Opeyemi Agbaje to start the week. He is the Chief Executive Officer, RTC Advisory Services Limited. Thank you so much. It's good to have you in.
It's good to be here in this beautiful news studios.
Thank you so much. It's good to also have you in. Well, everyone is talking about a hold in interest rates, saying the MPC might want to look at previous rate hikes that they've done in months to see the effect of it before they make any other move. What's your understanding of this?
That's my mainstream view. If you look at all the factors, you would expect a hold. But there's a minority part of my mind that won't be too shocked if there's a small raise. A small, maybe maximum 0.25. The reason being that the CBN might just want to signal a continued commitment to combating inflation. And to the extent that there's been no reduction in inflation achieved yet, they may just want to signal that we're in this until we tame inflation. That's why I hold, but yeah, I agree with most of the analysis I've seen. The evidence suggests that, hey, we should hold and watch how things shape out, watch the figures that may come from the rebasing. So the other contingency would then be the rebasing. If the rebasing figures are out, it may affect the MPC decision.
Many will say, like you've also said, we've not seen that drop in inflation figures, but there's been a bit of stability in the foreign exchange market, and some say 2025 is a year where they think that graph or that inflation rate graph would start to come down.
That's my view, but in my view, concerning inflation, you might want to divide 2025 into two halves. That's the way my mind is working. And the first half, we will still have to see through the battle against inflation. I'm positive that in the second half, we may begin to see the drop that we want. There's a possibility that the drop in the first half may be marginal, may not give the CBN and analysts too much reason to step down our concerns about inflation. But maybe in the second half of the year, things may have taken a more decisive turn. We might begin to see tangible drops in the inflation rate. And then the CBN may then be a little bit more accommodative in their policy stance.
It seems to be. Let's look at also the rebasing that we expect from the NBS. Many says it must be all-encompassing, and we must be very careful also with the figures that we would get, because these figures would be used internationally. So whatever the NBS is coming up with, how do you think that will also shape the narrative moving forward?
As long as it's based on a credible methodology. Remember, the basing GDP and the consumer price index.
Yes.
In terms of the consumer price index, I'm just keeping my mind open. Well, they're using 2024 as the base year, which is very recent. So most of the analysis suggests we're not going to see radically different inflation figures under the CPI rebasing. I'll wait to see that. In terms of the GDP, I of course expect a substantial increase in GDP from the rebasing. Remember, they're going to use 2019 as the base year. I believe there's been substantial enhancements to the Nigerian economy in the period, and there should be. Well, my hope is that with GDP rebasing, we may recover some substantial part of the GDP that we have lost to currency devaluation.
And that is where the fear, and some analysts have brought it up, that Nigeria might now look at it. Oh, I think with this figure, we can borrow more. We can do this. What sort of planning do you think this would help, looking at the fallout of economic reforms that we face at the moment?
Well, I mean, I'm not afraid of The last time we did a GDP rebasing,
yes,
we became #1 in Africa.
And I think we're
and
number 4.
And it was credible, and we've gone back to 4. And I think that there's no doubt in my mind that we're going to recover substantially, and there's economic basis for it. We're going to recover substantially part of what we've lost. And I would personally like to see us regain, if not #1, but regain
number 2.
2 and 3. It does not take away the imperative of, so for instance, our GDP per capita may become a more sensible figure. Right now, GDP per capita is less than $1,000. It paints a very negative picture. Remember, analysts use these figures to determine investments, to determine country risk and all of those factors. So it may be helpful to our reform efforts. It may be the first break we get. You know, we're entitled to a break. You know, it may be the first break we get from. But I see the concern with debts. It would naturally reduce.
Yeah, it would.
It would naturally reduce the debt to GDP ratios and make us make some space available for further borrowing. Now, from the point of view of what Mr. Wale Edun at the Finance Ministry, that's not a bad thing because, hey, they may want a little bit more space for financing their increasingly larger and larger budgets. But so that's a concern. We have to be fiscally responsible in that regard. But overall, I would like to see some appreciation in GDP from the rebasing.
Now, let's go back to inflation. I'd like to get your thoughts around this. What more do you think can be done? What sort of policies or initiatives can be instituted? Because at the moment, it seems like we are still up there compared to the figures.
I think on your program last year, I wondered. I think, personally, my words were, this current inflation may be a medium-term phenomenon. And therefore, we saw it as a phenomenon that will characterize 2023, 2024. And now I think most of the first half of 2025, I am positive that we've taken the bulk of the drivers of inflation. The two biggest being fuel subsidy removal and the currency balancing. It is clear that those factors have been absorbed into the economy. Therefore, there's a finite period for which we are going to have this high level of inflation. But it's not going to disappear on its own. It's going to moderate downwards over time. And then there will be some smaller drivers of inflation that will be introduced into the picture. We already know there's a telecoms tariff increase. There may be some electricity issues as well. So, but those will not have the size of and the impact of the two big ones we took.
Charges on ATM withdrawals.
Those are, yes, you're right. They're all smaller contributors. They may add up, but they're not going to be as large as. So in terms of what we can do, I think the biggest policy area has to be around food prices. So it's still the agri sector that we have to work on to increase food production, to increase security around transport logistics, to increase security on the farming areas and sectors of the country, such that domestic food prices may decline. The government has already made the point that some of that may have happened, but those are seasonal factors in my view. Seasonal factors regarding certain crops result in the price coming down after the harvest. What we need are more sustained interventions in the agri sector so that our food value chain will become more viable. Like I said, the other big factors, there's not much we can do anymore. We've absorbed the full impact of currency and petroleum. So if we focus on food inflation, we can see tangible impact on inflation.
On the fiscal side, let's touch on we expect the tax reforms. I think it's moving ahead. Do you also see any impact of that? You know, so that we wash hands, both hands. That's the monetary and the fiscal side.
On the tax side, I understand the politics. You have to be politically pragmatic. But I was a bit disappointed that we moved away to the extent that we did from the derivation principle that was supposed to be 50% or 60%. We moved it to something like 20 or so. 30, and now we have equality of states as 50%. By doing that, we've removed the incentives for the states to grow their economy, to try and increase the consumption in their state so that they can have a larger share of this. So, but hey, you have to be pragmatic. Rather than have the whole reforms derailed, you take the best concession you can and move forward and live to fight another day. So, but for me personally, I'm slightly disappointed that I thought that signaling competitiveness, states fighting to build their own their own development, that would have been a very strong signal to send to the Nigerian Federation. But hey, we'll take what we have. Taxes may even have some slight impact on inflation as well.
Yes, it might.
So these are all smaller drivers, but at the end of the day, I don't see anything that will sustain the levels of inflation we had in 2024. So I am positive that if we take the second half of 2025, and I am certain that except we introduce new drivers in 2026, inflation should read remarkably smaller than it is today.
We're already projecting, but of course, whenever we have you in, we like to do a bit of outlook. Now you've talked about this. We expect inflation to start to dwindle one way or the other. But Trump is also there with some policies that definitely Nigeria is not insulated from. It would affect us one way or the other. So looking forward to medium to long term, what's your outlook for Nigeria?
Let me take Trump. We have a double-edged sword from Trump in terms of energy prices. So, for instance, we know his policy approach is energy independence for the U.S. is even stronger in terms of his intent than in his first term. His first term was energy sufficiency. They didn't want to import fuel, but energy. But now they actually want to be an exporter. So that may contribute to reduce oil prices, which affects Nigeria on the income side. Of course, we get the consumers will be happier if energy prices come down. Inflation will be. So that's why I call it a double-edged sword. Consumers may like lower energy prices so that now we have a deregulated market.
So the price, it will affect the price at the pump.
We see the price at the pump go down. On the other hand, the national revenue would be depressed as global oil prices fall. So it reinforces the imperative of this word that we've trumpeted over and over again, diversifying the economy, growing our revenue base outside oil. It even supports the intention behind the tax reforms so that our revenues can be more tax-driven than oil-dependent.
Always an interesting time with you.
But I didn't address your question around outlook.
The outlook, yes, please.
I remain positive. I think that we would see GDP begin to grow. I think the growth rate of the economy is accelerating. I wish we had seen Q4 2024, but we were already at 3.46 by. It can only be better if we get some variables right. We might be inching close to 4% in 2025.
That's really, that'll be looking good for Nigeria. Mr. Opeyemi Agbaje is the Chief Executive Officer, RTC Advisory Services Limited. Thank you for starting the week with us on Business Nigeria. We appreciate your time.
Thank you very much.
All right, then.
My pleasure to be here.
All right, then. Coming up on the show, we'll take it from where Mr. Agbaje stopped about petrol pricing in a deregulated market and functionality of the NNPCL. Professor Emeritus in Petroleum Economics, Emmanuel Egdohan Foundation, Abuja, Professor Opeyemi Ledare, will join us to continue that conversation around the oil market and, of course, expectations from that space. Don't go away. This is Business Nigeria.